Yes, I do believe as well that it's impossible to predict where the Bitcoin price will go. However, I think there are some ways to estimate whether or not Bitcoin at a particular point in time is cheap or expensive. In other words, if Bitcoin is currently expensive, we might want to have less allocation in our portfolio. When it's currently cheap, we might even take on debt to buy even more Bitcoin. Now, there are plenty of mathematical models that try to figure out where we are in the cycle in Bitcoin. They try to figure out if we're currently cheap or expensive. I want to talk about some of those models, and I also want to talk about how I think a model is worthy following or potentially rather worth dismissing. Now, here's a very popular model, and I think it's not that useful. This is the Bitcoin rainbow chart. It's a very long-term chart that starts in 2012. It's on a logarithmic scale, so each of those horizontal lines are at 10x apart from one another. And so it starts when Bitcoin was below $10, goes all the way to today. And the idea is, of course, to rather sell when we are close to the red area and to buy when we are close to the purple area. Now, what's the problem with this chart? The issue that I have with this is that in the early days, the price tended to go above the trading range, and recently it tends to be rather below. So we see this especially in the price peaks, right? We went above in 2013, 2014. We reached the upper end in 2017, and then in 2021 and recently in 2024, 2025, we did not reach the tops. In other words, it appears as if this trend channel, right, this rainbow, is overestimating Bitcoin's growth rate. If this trend channel was to start a bit higher and the slope was a bit smaller, then maybe those tops could align a bit better, right? So I don't think it's very realistic to see the upper end of Bitcoin's trading range somewhere around 900,000. Here's a slightly better approximation. So this is the Bitcoin long-term power law. And again, the bottoms align pretty well, but here also the tops somewhat align. At least the one in 2011 and the one in 2013 and the one in 2017, 2018. Unfortunately though, we did not hit the top in 2021. Now, why is this relevant? It's relevant because subsequently we went down a lot, from 65k all the way to 16k. You don't want to necessarily hold a lot of Bitcoin in your portfolio during a move like this. So if you missed selling because this upper range said we'd go all the way to 125k, and then we didn't see that extra 2x, and you just kept on holding, then you would have just lived through this entire bear market. So this is not an optimal approximation of Bitcoin's trading range either, unfortunately. It's potentially good to pick bottoms, but it's not necessarily good to estimate the upside potential. So in other words, I think it's also unlikely that we're going to hit the 400 to 500k anytime soon. This is what that model here would imply. We can also take this model and just look at the deviation from this mean, right? The mean is the green line. And then we get this chart here. Sometimes we are above, sometimes we are below, but we can see how the tops tend to decline over time and also the bottoms tend to increase over time. In other words, the overall volatility of Bitcoin is decreasing. And so we don't have to make it too complicated actually. How about we just draw a line? We don't calculate it, we just draw a curved line and we try to connect those tops as good as possible. Here is what we get when we do that. So we've got this for the bottom, we've also got this for the top. So there's nothing mathematical about this. And those lines are also not parallel in any way, right? They tend to converge over time. This channel gets tighter and tighter over time. But still, it's the only approach that connects those tops very nicely. Now, I'm not saying that this model or this approach will work in the future, because we have seen approaches that worked well in the past, but then started breaking. So nobody knows if this works, but still, it's at least worth considering. And when we look at the current trading range, then what we are getting is an upside to a maximum of $113,000 per Bitcoin and a downside of $39,000, $40,000 per per Bitcoin. Here's another approach. This is the relative strength indicator, the monthly RSI. Now the RSI simply measures how quickly a price is going up or going down relative to a certain period in the past. So in this case, we're looking at the last 12 months. And when a rally is accelerating, the RSI is going up. When we see a quick crash, the RSI is going down. And we have somewhat of a stable range. Now, it seems like over time the lows get lower and so do the highs. But at least we can imagine some kind of a line that connects those tops and that connects those bottoms. And according to this moving average, we should rather be cautious as well, right? We are pretty far away from the bottom. And yes, we haven't hit a high similar to the prior rallies, but still, the current momentum seems to be rather bearish. Now, the vast majority of people that trade crypto actively, they don't just allocate to Bitcoin, but that try to make money with altcoins actually lost in the last year. Have a look at this. This is the performance of the top 100 altcoins in the last year. And yes, there are a few outliers, but how likely is it that you owned the Mantra token or the BGB token? Most things went down and by quite a lot, right? We've got losers of 60%, of 80% over here, of 70% over here. WorldCoin lost almost 90%. And that happened during a time when Bitcoin actually went up. It went up by 26% in the last 12 months. Yet most altcoins are going down. It truly looks like the market is maturing because have a look at the thermocap multiple. So this shows us the mining revenue or the Bitcoin issuance over time. How much money do the miners make? And those peaks tend to decline over time. And if we just again draw an imaginary line here, it wouldn't be that surprising if we've already peaked right now. It's not certain, right? Nothing is certain in crypto, but just looking at some of those long-term charts, I'm not sure if it makes sense to be incredibly over-allocated to anything crypto. And Bitcoin still did the best, right? Bitcoin still outperformed most altcoins in the last year. Now, I've talked about this several times on this channel and I quickly talk about this again. The way how I currently navigate this market is I bet on falling prices. Most communities across crypto have lost in the last few weeks and last months, not so the community over here. Now, here's a straightforward approach to make money in this market. We can simply look at the top performing tokens, say in the last 24 hours or in the last week, and then we find something like Kronos, right? Kronos made 40% in the last week. When we then look at the relative valuation of Kronos to Bitcoin, then that's the long-term chart we get, right? Most of the time, Kronos does worse than Bitcoin. Just during launch, a few people made some money, but since then, we tend to see continuous underperformance. So there's an underperformance of more than 91% since that peak. And so one straightforward way to make money in this market is to just look for pumping tokens and then bet on falling prices, right? When you short over here and you exit the short over here, you're making 42%. Same goes over here. You're shorting all the way down, maybe minus 40%, maybe minus 57%, right? There's pretty straightforward money to be made. It's just important not to get caught up in those pumps when shorting. So the idea is to do the exact opposite of what we tend to do in a bull market. In a bull market, we want to buy the dips. In a bear market or in a market that's at least not expanding that much anymore, we want to short the pumps. So we look at pumps, we look at price rallies that we think are not justified, that should turn around because of the long-term chart, because of tokenomics, because the news don't really justify long-term price appreciation. We look at those kinds of opportunities and then we short, then we make money. And so in this particular example, right, with Kronos, I don't think it's necessarily the best time to enter already. Again, in the past, we've seen way larger pumps. This was 74%, this was 44%, and over here, we've got a rally of 123%. So it seems like the Kronos rally is just starting. I'd feel much more comfortable after a rally of 70% or even more to then enter a short, right? But this is the kind of approach that makes sense. We want to look at things that unjustifiably went up that we can then short. Now what's important with this approach is to be liquid, as in you want to have proper risk management. You also want to open those positions where it's comparatively cheap. So you don't want to get eaten up with financing costs via perpetual futures, etc. Right? It's better to do this very traditional, maybe by borrowing the token or maybe by using decentralized protocols. It's not as straightforward as just putting a few $100 in a meme coin and hoping for a 10x. It's a bit more complex, but it does provide long-term outperformance. The odds are in our favor. Again, most altcoins underperformed Bitcoin, even while Bitcoin tended to go up in the last year. So if you want to know more about this approach, feel free to check out the premium membership. It's down below. It's thebitcoinstrader.com. If it's your first time here, feel free to subscribe as well. I publish here regularly. A like would be very much appreciated as well. See you next time. Cheers.